Hello folks, Scott Vance here from TaxVana. I'm going to give you a little instruction on how to use the IRS's tax withholding calculator. Clients that have big refunds or owe a lot at the end of the year often ask how they can adjust their withholding in their W-2 to be able to basically get down to zero. And what the withholding estimator calculates, basically it'll ask your information based off of your pay stub, and from there it will create a projected tax return as if you've gone through the whole year. And from that, it'll give you a recommendation on what to do to get to zero. So the key thing here is you need a current pay stub. So it doesn't necessarily have to be as of the most recent pay period, but you could be within the most recent the better, and the most typical pay period would be great as well. So if you've got a bunch of bonuses or other types of special pays that you don't usually get, you would want to prefer to go to with a straight like 40 or 80 hour work week or bi-week, and the typical pay that you would get. So that's what you need to get started. So I've got an example pay stub here. I'm not going to show you. I'll refer to it so I can get the information that I need. So here we are. This is the IRS's withholding estimator, and I will make sure to put the link to this in the below as a part of the video that goes out. So here you just click to use the withholding estimator. Okay, so you can see there's multiple steps. If you've got some additional credits, like you get the child tax credit, dependent care credit, some of the other credits, you might need your prior year's tax return to go ahead and get that information, or you could just do it based off of your W-2, and you should be pretty close based off of that. So here we are. We're going to say this person is single. You can do it with married filing jointly, or like you see any other status. And then, do you have a job? So typically most people have a job, and we'll say yes. And then they'll ask you, do you plan to claim dependents? So if you've got that, you say yes. So this person has a dependent. So going on to next. So income and withholding. So this is where you're going to need your most current pay stub. So the first income source, this is either the taxpayer or the spouse, which however you want to design. Just remember who your first and second is, because at the end it'll provide information on how to adjust withholdings, and it'll use the first income source or the second income source. So this person has a salary. I'm sorry, they are an hourly job. They had this job all year, so this would help you if you have a job a half a year or something like that. It gets a little bit hard to be able to project if you don't have a year. It just makes it a lot easier. So this person's paid every 2 weeks. And then again, going back to your most recent pay stub. So this person's most recent pay period ended for them on 4/19/2025. And then the pay date was, I think it was 5/1. Yes. 05/01/5. And then, like I said, this is a good representation. And then what you have to do is you have to go into the numbers. So your wages per pay period. So this person's wages per pay period before deductions is $26.90.40. And then you have to include the year-to-date amount. Excuse me. So 29,305.39. And so here it provides, based off the information that it has, it gives you an estimate what you expect the annual income to be, which for this person is pretty close to what would have stated on their form. So we're going to click yes. And then what you have to do is you have to go into your federal. So this is specifically your federal. These are your federal income tax. So you'll see on this person's pay stub, they have it broken out. They've got Social Security, they've got Medicare, but you need specifically the income tax part of that. So in this person's case, they had $269.35 withheld for the period, and then for the year they've had $33.95.40. Okay, so a couple of things here. So if you contribute to a 401k retirement plan, thrift savings plan, and now this is a traditional, you want to mark this. So this person does, and they contribute 118, and their amount to year to date is 1030. And then you want to go down. So like I said, you want to make sure. Okay, so if you've got a health insurance plan, HSA or FSA. So here we're talking about health insurance. So health insurance plan. And that'll be broken out in the pay stub. So this person for their health insurance pay, let's see, Roth retirement, life insurance. So this person doesn't have any health insurance. So if they did, we would include that in here. So here you could play if you've gotten a bonus that you expect in the future. And then this is if you already got a bonus, and then that amount is, so basically if you've got a bonus, it's included in that total income. And then here you have, if you have other sources of income. So if you have a small business, side business, if you're expecting some income from investments, so if investments in like dividend stocks or something like that, that'd be a way to include that. Other sources of income, that would also be a way to include, if you have rental properties, you'd be looking to include the net, so after your expenses of rental property income into there. But this person has none of the above. And then we'll click next. And then adjustments. So here's kind of some things. So student loan interest, people that have student loan interest, that's an adjustment to your tax return, so you want to include that. Generally, student loan interest, most years is kind of, obviously as you pay your loan off, it goes down, but should give you a good estimate what your prior year's tax return included. Educator expense deduction is no longer. Contributions to the traditional IRAs, so that's kind of similar to the 401ks, but specific to traditional IRAs. But if it's a Roth, you don't get any tax break for that, so don't include any Roth. Nothing really for most people there. So we click next. So here's where you got to go in. So this is you got to choose whether you have a standard or itemized deduction. So you can look at last year's tax return and see what you had. Most people will have the standard deduction, but yes, if you do itemize, you can go ahead and use that. So here we're going to do just the standard deduction. Tax credits. So this is where it gets a little bit wild. So we have, so for the individual person themselves, you have to put your age in there, and this is more for like when you hit 65, you get some additional tax credits. So my age is 50, and then child independent tax credits. So this is where you have to get into children. So my child is going to be 17, and then so that's basically to get the $500 tax credit for child tax credit. And then for people that have children under the age of 13, you would want to enter the number of those. So say my one was not 17 but 13, and then what you would do is enter the amount of qualifying work-related child care. So basically, I would just pull the amount that you had paid the prior year for child care expenses, and it will compute that. A lot of these are kind of real specific, so if you have any questions, let me know. So moving on. Okay, so you can see it gives me a result here. So now basically, based off the information I put into it, it tells me that my withholdings are going to be about $79.68. My tax obligation is expected to be $69.60, obviously resulting in a projected refund of $1,000. When you go down here, you can look. So here, if you want to adjust your withholding, so say I had owed or wanted to get rid of that refund, I would download the pre-filled Form W-4, and when you open that, it tells you how to make the adjustments. So about 3 years ago, the IRS went to a new way of computing your withholding. Most people seem to remember, just putting a flat, clicking the box saying married, found jointly, and then providing number of dependents. But they've gotten a lot more specific. So you can see here, it gives you the Form W-4 that you need to file. Most employers have gone away from dealing with paper Form W-4s, and they have an online portal that simulates it. So you'll have to make the leap of faith to pull the numbers from this to put into. So that's what the W-4 they provide. And then going down, you can always go back and edit your information. Take a look at what you've got, and you can print it to have it as a permanent. A couple things to remember. So when you do this, especially if you do it earlier in the year, you want to make sure that once the year turns over, so December 31st, in this year, we're in 2025, so December 31st, 2025, you want to make sure you go back in and redo it and then update your withholdings, because it's projecting, any changes it makes. So here we are in May. Any changes we make will only, so once you go to that full year, it kind of messes up the withholding. So you want to make sure you go back in holding to adjust for that. If you have questions and need help doing it, I have worked with other clients looking over their shoulders to show them how to do it, or I can do it. I do need your pay stubs to do so. It's a trusty withholding. The calculator works. I've had clients use it and it's been successful. So it's a valid calculator. Any questions, let me know. You can look below and there'll be a link to where you got to go. And then just reach out if you have any questions. Have a good day.